Lucretia and Josh and I are here from Quintal Realty Group to join with Kim Barrier from Umpqua Bank about buying your first home, which we know brings up a lot of questions. We tend to get a lot of the same questions when people call. They'll see a house that they're very interested in purchasing, and typical, like, I'm a first-time home buyer. What am I supposed to do? This is very scary and totally understandable. And so we thought we could come in one place and address a lot of the process here, eliminate some of the fear associated with buying your house, and then really talking about getting qualified, because a lot of the first questions are usually around qualification, which, I mean, I don't know if you see that too, but I feel like I get a lot of that. Like, I'll get people messaging me and just saying, how much do I need down? Or that kind of thing. Like, okay, well, that's going to determine a lot on different kinds of factors. So I'm thinking here, what we'll do. So Lucretia and I work together with Josh at Quintal Realty Group here in Fortuna. And Josh is on too. So we work as a team. We kind of, we each have our own clients, but then we also help each other out as far as even showing property or writing offers or just anything and everything. Lucretia does a lot of the back end stuff too. And Kim Barrier is definitely one of our preferred realtors here locally. So I want to introduce Kim, who's been in the area for 20 years. So she's knows Humboldt County, has been doing mortgages for 5 years. And we're going to give her the show to go through. She's got a slideshow here for some home buyers. I first want to say, as we're going through this, just to, if you guys have questions, to put those in the chat and we can address them afterwards. And also make sure your mic's off, just in case you have kids, or, we know it's later in the day, so in case you have kids or barking dogs or something that are coming in. And we don't plan to be too long. We want to get everyone in and out so you can enjoy your day, but also answer your questions. So with that, I'm going to turn it over to Kim to get us started with the loan process.
All right, awesome. Well, thank you so much for having me. Good evening, and thanks for joining my presentation on preparing for home ownership. I really enjoy working with first-time home buyers. I love being there to navigate you through the process. I'm with you the whole way. I let you know, from beginning to finish what, what's going to come next. So my goal is to really make it an easy and stress-free process for the first-time home buyer, because it makes me sad when I hear people say that they didn't have a good experience. So that's something that
Yes.
I really take seriously, is making it the whole experience great. So I'll get started with my slideshow. So tonight I'm just going to touch on a variety of topics. Becoming a homeowner, budget planning, loan pre-qualification, home financing process, and tips for getting started. So buying a home, as you imagine, is probably the biggest decision that you'll make. And while considering that decision, one of the biggest things people are thinking about is renting versus home ownership and determining what is right for them. And there's pros and cons for both, for renting and buying a home. One of the advantages to renting is that you can really easily move at any time. So if a new neighbor moves in and you don't really care for them, you can find another place and move. On the flip side of that, you could find yourself having to move when you don't want to, with very little notice. So owning your own home gives you that security that you're in control of, how long you want to be there, when you want to move, if you want to raise your kids in the same home. So that's just a really nice to have that security. And then another thing to consider is, are you ready to maintain a home? When you're renting, if your water heater goes out or your roof starts to leak, you get to call your landlord and they, get to deal with that. When you own a home, it's something that you either have to fix yourself or you have to find somebody to fix it and, pay for the costs on that. When you're renting, you're building your landlord's equity, not your own. So owning real estate is a great way to build your wealth. Every month you pay your mortgage is getting smaller, but every year that goes by, the value of your home is increasing. There's also tax benefits to owning a home. So I really encourage people to contact their tax consultant to see which ones apply to them. And when you're renting, you're never really sure when your housing expense is going to increase. It could increase with very little notice. But when you have a mortgage, you know what your mortgage payment is going to be for month to month and years to come. So that adds more security as well. A licensed loan officer as myself can help you determine what you can afford and what the best loan program and options are for your situation. So we kind of take that element of the decision-making, process and make it a little more clear for you. And I always encourage that you ask lots and lots of questions. I love questions, and we're a great resource to answer all of those. So moving on, we're going to talk a little bit about budget planning. And some things to consider, when you're making your mortgage payment. It's really important, in my opinion, to consider how much you feel comfortable paying every month for a mortgage. You may qualify for, a really high purchase price and loan amount, but you may not, feel comfortable with that monthly payment. So the monthly payment is a great place to start. And right now, interest rates are historically low, but they're not going to stay like that forever. And so taking advantage of these really low interest rates can help you buy a home that may cost a little bit more, but that would still be within your budget. And so you can see in this example, the difference of just 0.5% rate, makes a big difference in how much the payment costs. So the purchase price would be, $500,000. The loan amount is $400,000 in this scenario. And as you can see, you're saving about $112 by having, half a percent less on the interest rate. So that's a great way to help, save money. And so one aspect of having a mortgage is your monthly mortgage payment. And that's, when you pay that, you're paying your principal and your interest. But there's other costs that really need to be considered when you're budgeting. There's going to be property taxes you're going to have to pay to the county, homeowners insurance, and in certain areas, even flood insurance. There's going to be mortgage insurance, and I'll go into more detail later about what that is. And then depending on where you live, there could be homeowners association fees, and utilities could potentially be higher in the home that you are buying versus the home that you are renting. So all things to take in consideration when budgeting.
Kim, I know I wanted to save the questions for later, but one of the slides, and it comes up pretty often, is that difference between the interest rate and the APR.
Yep.
What is the best way of describing that difference?
The APR is really designed to help borrowers shop loans. So the APR is the annual percentage rate, and it takes the whole cost of the transaction in consideration with like closing costs and everything. And there's not everything is incorporated in the APR, and it can vary lender by lender. But if you are shopping for an interest, rate with different lenders, it's one way to compare to see like what the costs are, to help make the decision for which, loan is right for you. And if you are shopping, I encourage people to send me their worksheets and loan estimates, and I can help them, look through them and compare those costs.
Yeah, cool. Okay, thank you.
Okay, so pre-qualified. So Kim was talking about that earlier, that, it's really important before you make an offer on a home to get pre-qualified. And that's really going to allow you to know what you can afford and avoid any surprises down the road. When I pre-qualify people, I look at what is called the debt to income ratio. And that is evaluating their monthly expenses, including the mortgage payment, but it also includes like a car payment, credit card bills. And then that's in comparison to how much gross income is coming in. So we do look at the income before taxes are taken out. And different loan programs have different debt to income that they allow. So that's something that we take a look at, you know, for each individual person. And then credit scores and available sourced funds for down payment and closing costs are also a consideration. And so when I'm looking at your pre-approval, pre-qualification, there are some, you know, minimum information that I look at to determine if you qualify. And so income and employment history are one of those. So I'm basically looking, you know, if you're full-time or part-time, have there been any gaps in employment? If you're salary versus hourly pay, and if you have 2 years employment history. Assets are basically, you know, we look at how much money do you have in the bank to use towards your down payment and closing costs. And then the credit history, I will look at your credit score. Most borrowers have 3 credit scores, and so we use the middle score. And if there's 2 borrowers on a loan, we use the lowest middle score. If you don't have a credit score, that's okay. Some people just haven't, you know, built up enough credit out there to have one. And so we can still do a non-traditional credit report using like a Verizon, like a cell phone bill, Hulu I've used, you know, car insurance payments. So we can still build, you know, your credit history in different ways. And then we're also going to evaluate if you had any delinquencies like late payments, bankruptcies, things like that. So we'll take a look at all of that. And, you know, even if you're not ready to buy a home today, I highly recommend going through this process if it's something you're thinking about, because even if we find out that, let's say you don't have a high enough credit score, or maybe there is an issue with your income or employment, I can help people set up a plan to overcome that obstacle. I just closed a loan for someone that I was working with for almost 2 years, you know, on building their credit and getting their, you know, employment and everything together. And so it was really rewarding to see them, you know, get that loan closed. So okay, and so let's see here. So down payment, the minimum down payment really varies by the loan program. So many loan programs have low down payment options. You can, you know, do as little as no money down. There's a 0 down payment option through the USDA. There's loan programs where you can borrow the down payment, and you can even borrow funds that go towards the closing costs. And then there are loan programs for first-time home buyers that allow as little as 3% down. So I would basically look at your situation and determine which one of, you know, those would be the best for you. The one that I see used most often is a 5% down option. So a lot of people think that, you know, you need 20% down to buy a home, but you really don't anymore. And then also you can use gift funds as a down payment. We just have to make sure that those funds are coming from an acceptable donor, like a parent, a relative, a mom, dad, brother, sister. And then funds also need to be adequately seasoned. And sourced, and that's really important, because I talk to a lot of people and they're like, oh, I've got $20,000, but it's in cash in my safe at home. And, you know, that's okay. I mean, the problem is that when you go to deposit it in the bank, it's going to show up as a large deposit. And when your loan goes to the underwriter and they see that, they're going to want to know where the money came from. And if it was just money you had, you know, saved up around the house, it's not going to be acceptable. And so at that point, you know, I recommend that people, you know, leave it in the bank for a month to 2 months, and that's considered seasoned. And basically that just means that the deposit doesn't show up on the bank statement any longer. So another important thing to think about.
Kim, a couple questions on this.
Oh, sure, one. Go ahead.
Do you, when we're talking about down payment, do you also do construction loans, land loans, and rehab loans?
So I do not myself do construction loans. However, there's another loan officer at the Arcata Umpqua, Barbie Turnbaugh. She does construction loans.
Okay.
We have our own portfolio program, Umpqua. That means we're basically lending our money for that loan program. We have renovation loans, a conventional as well as FHA, which are really great because then someone can get a home that maybe is just a little outdated. They want to do improvements and they can, do that. And that's for as little as 3 to 5% down as well. So.
What about land loans? Do you do those, and how much do you require down on those?
We don't do land only.
Oh, okay.
Yeah. People can do like manufactured home loans where they that would be like a certain kind of construction loan where if they bought, the land and then put a manufactured home and it was considered real property, they could do something like that, but we don't do just only land.
Oh, okay.
Okay, so we talked about it a little earlier that mortgage insurance is something that, borrowers need to factor into their budget for their monthly budget. And so if you use less than 20% down, typically, you need to pay mortgage insurance. And that basically is ensuring the lender that if you defaulted on your loan, they would be able to recover some of the money that's owed to them. And so the mortgage insurance the cost is gonna vary depending on the down payment, the credit score, and the loan program requirements. And like on a conventional, just a standard home loan, we can actually shop for that mortgage insurance through different providers. It just takes me a few seconds to compare, 5 or 6 different providers, and then I can choose the one that would be most affordable. We also have first-time home buyer programs. If you qualify, there's an income cap, but if someone qualifies for that, they actually get discounted mortgage insurance as well, which is really nice. And then on conventional loans, eventually that mortgage insurance will go away when you have more equity in the home. On an FHA, which is a federally insured home loan, depending on how much money you put down, that mortgage insurance could be, with the life of the loan. So those are all things that we, look at and consider for, your particular situation. Okay, so closing costs I find throw a lot of people off because they think I have $20,000 total for down payment, and so I'm always like, well, how much total do you have for down payment and closing costs? Because closing costs can actually be about 3 to 5% of the loan amount, which is quite a bit, and people are really surprised, to learn about that. With most loan programs, the seller can pay all or a portion of the closing costs. And I usually tell people to discuss that option with their real estate agent because it really depends on the market and how motivated the seller is, if that's a good option or not. Typical closing costs include the lender origination fees. So Umpqua, our origination fee is the only thing we charge, related to what we're doing, and that's $995. And then there's third-party fees, such as for the credit report, the home appraisal, and the title and escrow company fees. And then you have your prepaid expenses. So you've got your property taxes, which will be prorated depending on, when your loan closed. And then you do have to pay 12 months homeowners insurance at the time of closing. And then any interest on the new loan for that month.
That lender origination fee, how much did you say that was? 900?
Right now it's $995, but I've heard that it's going to go up a little bit because and that kind of covers like any verifications of employment or things like that we do. It just helps cover like costs,
It seems like that seems like a pretty very fair, pretty inexpensive.
Yeah.
I've seen them much more than that. Yeah,
definitely. And, and the thing that people should keep in mind too, is that you don't pay anything until the loan closes, except for maybe the appraisal. Like if we got to the point where we ordered an appraisal and it happened, and then, for some reason it didn't close, that would really be the only thing that, a borrower is required to pay. And if you start the process and get pre-qualified and don't go any further, then, there are no fees. So. And then once again, the funds used for the closing costs have to be seasoned and sourced. Okay, now we're going to go into the pre-qualification process a little bit more. So the pre-qualification really lets you and your real estate agent know what you can afford and which loan program you qualify for. So what I usually do when someone calls me is I send them out a checklist of documents that I need. When I get those documents, I help them fill out their loan application. We can do it over the phone. It takes about 10 minutes, or we can do it in person. And then at that point, I am able to run, your credit report and then get a pre-qualification. And it also shows the real estate agent and the seller that you're willing and ready to buy a home, that you've already been checked out and you have everything that's necessary, and that you're a serious buyer. The really cool thing about Umpqua is that we have a special certificate called the Purchase Advantage. And that takes the process one step further by submitting the loan application to the underwriter. And the underwriter is the person who actually verifies like all the documentation. I mean, they go through it with a fine-tooth comb. So I'm always like anticipating, what is the underwriter going to want? Is this going to be an issue with the underwriter? That's kind of what I'm constantly anticipating, as what they need. And so with the Purchase Advantage, you get to go when you make your offer on a home, and you get to submit the certificate that says you've already been checked out by an underwriter, and there's really going to be very little, issues down the road. And so I really think it helps make offers more competitive. I also do it with people who have maybe a complex, income, or, anything that might be questionable. That way we have a solid home loan.
That's cool. I didn't know you guys did that.
Yeah, it's really nice. And then I can also, if somebody doesn't have time to wait for that, I'm happy to send emails to the seller and let them, or the seller's agent, and let them know that I've actually looked at all of their credit, asset, income information to make that decision. It's just not, that they filled out an application and it looks good. So
that's huge. Okay. Yeah.
And so I mentioned earlier that I send a checklist of documents to people that are interested in getting pre-approved. And so those are the same documents that we would submit for the loan. And so it really depends on a person's, specific situation. But, the standard documents are usually the most recent pay stubs covering 30 days, last 2 years W-2s, and 2 months of bank statements. We may need 2 years of tax returns if someone's self-employed, or they have like rental income, things like that. And then we do have some additional requirements for self-employed. Since COVID happened, there's just a bit more paperwork. It's a little bit, more challenging for self-employed. And then this is just kind of a little flow sheet that just shows the loan process at a glance. And like I said earlier, each step of the way, I'm in touch with, the buyer. I'm in touch with the agent, letting them know what's going on, what to expect next. So once we get the pre-approval together, and I get all your documentation, you're able to go out and work with your real estate agent. Once you receive an accepted offer, then I would send out disclosures to the borrower, and they're able to sign those electronically, which is really nice. It makes it easier for them. Then we order an appraisal. We submit all the documents to the underwriter, which is once again that person who's going through everything and making sure that the loan meets all of the guidelines and requirements. And then once they approve the loan, the borrower goes and sets up home insurance. And then once the appraisal comes in and everything looks good, they get final approval. And then the documents are sent to the title company. And then the borrower goes into the title company and they sign all their documents, bring in their money. And then once it records, which is when all the documents go to the county's recorder's office, the home basically is in the borrower's name and they own it, and then they get the keys. So that's my favorite part. Yes. They're like, yes, you finally own it. So
yes.
And so once again, the Umpqua Bank loan officers provide all of this assistance complimentary with the pre-qualification and consultation. I really enjoy answering questions that people have. There's never too many questions. And, I'm local. I work out of I have an office in Eureka. I have an office in Fortuna. I cover Garberville. I can do anywhere in California. So, I'm always here to answer your questions throughout the process. These are some more resources that are available out there. I can always send an email out with these links if somebody wants to be able to look them up. But there's a lot of really great, reputable resources that'll help empower homeowners to make good decisions as well. And like I said, I'm always here to help. I'm really excited to answer questions. That's my cell phone, so people can call me anytime. And I'd just be really happy to, talk to them and get them on the path to homeownership. So I appreciate your time.
Yeah, awesome. Hey, I had a follow-up question. You were talking about first-time home buyer loans. Is that a special kind of loan that's different than maybe USDA or FHA?
Well, what it does is it allows people to have a lower down payment. So they can do that 3% down payment. And then it also allows them to have the lower mortgage insurance, and it actually puts a cap on their interest rate as well. And so that's like Home Ready or Home Possible are the two. They're just conventional home loans. But they're a really great, tool for people buying homes. And Home Ready will even allow people to use rental income from like an accessory dwelling unit. So if it's not an actual 2-unit, they can still use rental income, which will help, people get into a home that way as well.
Okay, so you could do a first-time home buyer and buy a property that has a rental unit on it.
Yeah, an accessory dwelling unit.
Yes.
That is
Okay.
yeah. And they can use the rental income to qualify for that program.
Okay, I always thought first-time home buyers, the USDA would, well, it's a different loan, but I thought it could not have any kind of ADU or rental.
The USDA is different. So the Home Ready and Home Possible is like a Fannie Mae, Freddie Mac. Those are your conventional home loans, what we call conventional. Whereas like USDA, FHA, and VA are government home loans. And so those are government insured, and they have some different, requirements.
Okay, cool. And then the Home Ready would be different also from, you were talking about like there was monies available for down payment, right? Or closing costs.
So that one is it's called a Cal HFA program, and it's a California assistance program. And there's an FHA program available with that, and a conventional. And so you actually can borrow the down payment, and then you can also have a third. So you have a first mortgage, and then you have a second for the down payment, and then you can have a third for part of the closing costs.
Wow. Okay.
It's a really cool option too for people. So has a little bit more strict debt to income and credit score requirements. So.
Okay. I didn't really realize. I guess I just am so familiar with hearing about USDA and FHA that I didn't even realize. I've the Cal HFA, if I'm saying it right. Yeah, I hear of that one, but the Home Ready, if that's a first-time home buyer one, I have not heard about that very, very often.
Yeah, and a lot of people, I think, I don't know why some loan officers just don't get into using those, but I mean, they're really, I can't say enough about it. I mean, it's just a conventional home loan. You still get the benefits of the mortgage insurance going away, when you get a certain amount of equity and everything. And it's just really great that it puts a cap on the interest rate. Especially for people who might have a little bit lower credit score. And then it also allows them to have a better rate on their mortgage insurance. So, but there is an income cap. So sometimes people may make too much income. So one thing I do is I look at, those are all things that I look at when I get someone's information.
Okay, I see. Okay, so really what happens is someone would come talk to you and you'd look at all of these different loans.
Exactly.
And determine, okay, based on your income, what you're willing to pay, here's where you're at. Okay.
Exactly.
Okay. Oh, very good. Thank you for that. So Lucretia and I have also made some steps for homeownership, just from the process of the very beginning until close of escrow. And step number one is always, we say, is to get pre-qualified. And that's why we had Kim talk first. So we really appreciate all that information, because then once you get that and you know what your budget is and what you're shopping in, then it makes it a lot easier to go out and look for houses. I think one of the hardest things is falling in love with a house first, then trying to get pre-qualified and realizing you can't afford it, and that nothing will ever compare to that. Like you found the house that you loved, oh, your budget's now actually a little bit less. That's pretty heartbreaking. So getting qualified first, and then finding your house, especially in this market right now too, because things can move so quickly that by the time you say, yes, I like it, oh, now I'm going to go call Kim Barrier. Well, you already have 5 offers on it. They're about to take an offer and you're not even pre-qualified yet. So really, like, getting pre-qualified would be the first step. Second would be finding a real estate agent. And I would say the most important part here is having someone that you trust to have your best interest in mind. Right. And that that you follow, that's local. I would think that almost seems obvious, but it's not so much. So having someone local kind of gets used to common issues that you may have in the area that you're purchasing at too. Some areas deal with, like, we have a lot of termites and beetles. Like, I'm a little bit more familiar with that than maybe someone who they don't deal with that where they are. And then just somebody that you trust and know that are going to look out for you. Anything to add on that? Okay. Step 3. Okay. So this is what I typically am talking to buyers about when we go look at houses, is picking your top 3 things that you're interested in, because you're always going to find houses that, you can pick apart every house. I mean, even, we've got ones over $1 million. But if you pick your top 3 things that you just are must-haves, it's easier to pick a house, be like, yes, we want to write an offer on this, rather than get distracted by something that's not as important, which I know can be hard to pick the top 3 things. But it's really helpful when you're looking for houses. And especially given that there aren't very many houses on the market. Fortuna right now has 15. Humboldt County, the entire county, has 200 listings, which really is not that much. And we keep not hitting 200. We're under that, which is really historically very, very low. So just because there aren't going to be houses that have your whole entire shopping
there's
list.
no way.
Yeah.
Unless you're building it.
Yes. That's why you're asking about construction, and that does come up quite a bit. People asking about that. Okay, so you've got your list, you've got your agent, you're pre-qualified. So the next thing would be shopping for a house. And there are kinds of different ways of going out and shopping. A lot of times it's the internet age. A lot of people are going on Zillow, Realtor.com. We have our websites. A lot of times people are narrowing down their choices through there. I would say a drive-by is usually one of the most valuable things you can do. Just knowing that you like the neighborhood. I mean, driving by on a weekend. And one thing to keep in mind too is that just because a house showed up on the market today, there could be tenants involved or tenants there. So sometimes you can't necessarily get in 20 minutes. Sometimes you can get in 20 minutes, but sometimes you have to schedule it maybe the next day or around someone's schedule. And just to keep that in mind, I would say probably one of the best ways to go about it is scheduling, like, hey, I'm ready to go buy a house. Okay, great. Let's go in 2 days or however many days. Let's go look at these 4 houses all at the same time. And then just kind of rate them as you're going. But shopping is pretty fun.
Yeah, for sure.
Yeah. And then you can see how things measure up. Number 5. So you find the house that you like, and now it's time to write an offer. There's a lot to be said about this part of it. The market is so much different right now. And that's why with Kim Barrier talking about how she will talk to the other agent, getting that pre-qualification and that certificate that you guys give, that UMQA, what did you call it? The UMQA approval?
Advantage.
Yes, UMQA advantage. That will get you so far ahead when you're writing an offer. And there's also tactics you can use for having your offer be received and accepted, and it can get pretty crazy.
Yes.
The way offers are going and different contingencies being removed. So again, coming back to having an agent who's familiar with this and knows how to, hear your needs, and then also like sometimes it's like, this is a hard no. Okay, so we're not going to cross that, but there's different things you can do to creatively make your offer the top of the pile rather than at the bottom, because that can be very heartbreaking, and especially time after time, especially in this market, just like, oh, so defeating. So so writing an offer is, we got a bunch of tricks for that, and then definitely working with the lender to get that to work. Once you get an accepted offer, often new homeowners get confused with what does it mean when I'm in escrow. So when you get an accepted offer, the buyer and the seller, so all terms have been agreed to, we go and we open escrow at an escrow company. So here in Humboldt County, it's title escrow company are the same. We open escrow and then we start the process. So we start investigating the property, looking at disclosures, getting your loan to go. It takes about 45 days, I would say. Kim, are your loans taking about 45 days, you think?
It's really dependent on the appraisal. So right now, because of the demand and our lack of appraisers, there's certain areas that are, could potentially take more than 45 days, especially like Southern Humboldt, even Fortuna,
Yeah, Southern Humboldt.
Yeah, so I mean, we move very quickly. It's really just all about like how long it's going to take the appraiser to get the appraisal.
Yeah, it's like we all hold our breath for that too.
Yeah.
So that whole process would be from getting the accepted offer to going through disclosures and having investigations to getting your appraisal and to turning in all of your stuff to your lender, your bank statements, your taxes, your verification of and everything that needs to be done, all the way to close. That's your escrow period. So that can be 45 days, 60 days. If you're a cash buyer, it can be 4 days. It can be really quick. So, but it's from when you open escrow until you close escrow. That is being what we call in escrow. And I know I've had buyers, and I forget too, we'll get into escrow, and then they'll call and say, so when do we start escrow? And we're already 2 weeks in. Like, oh, we're in it. No, we're already in it. So that is what that is. So you get accepted. And then the step 7 would be you go through all of this stuff and you close escrow. Now, I think it's important too, because a lot of times people think there's like a time period between closing escrow to when they get the keys. On that last day, when you close escrow, unless you've agreed otherwise, you get the keys that day. You take over possession, your name gets recorded on title, and that is your house. So that's why the beginning part is so important, because that's when you're going to determine for sure that you want it. You want to catch any problems that may arise, because after you close escrow, that is your house. So anything that you didn't discover, you now inherited. So you want to try to do your best working with an agent just to make sure you uncover all of the potential pitfalls, but also all the great things, all the things that work. And being in Humboldt County too, we have so many rural properties that are on wells and septic systems and unknown property boundaries. All of that takes time. So you want to make sure you investigate that as much as you can prior to close of escrow. But yeah, those are our 7 steps. This last part, I don't know if anybody had any questions. Did you have any questions or anything that you wanted to add?
I kind of wanted to add, with being in escrow, the cost of pest inspections and home inspections come up, and people are unaware of those costs. So be prepared when you buy a house. There is some upfront inspection costs that you're going to have to pay for.
Yeah. Oh yeah, that's a very good point. And your earnest money deposit.
Yes.
So like if you're going to put a deposit on a rental, there's also a deposit that goes down on a purchase that would get refunded back to you if you cancel anywhere in there based on the contract. If you do follow all of the steps all the way to close, it just gets credited either towards your closing costs or your down payment. Or there are certain loans where you don't have any kind of payment, and maybe the seller had all of the inspections done, you would end up getting a check back for that amount of money too, which is, we've had people, over my 15 years of real estate that I don't think they've really had to pay anything. right? Like they got a credit back. They wrote their offers where they got a credit back for closing costs. They got a USDA loan, which is 100% financing. So they wrote their check for however much it was, 500,000 for a deposit. And then they closed escrow and they got that money back, which is crazy to think, right? You buy a house and it can be almost cheaper than a rental, but
Right.
it's possible.
Yeah.
Yeah. And I think, like Kim was saying too, a lot of people don't realize that you don't need a large down payment. There are options out there. So especially if you're renting and knowing rental prices, home ownership definitely something to look at. Yeah. So any questions or anything you guys want to add on? Josh, did you want to add anything, or Kim?
Yeah, I have a couple clients that are looking for, in particular, just like property, not necessarily the home. Can you go over how much they would need down? And I know Kim Barrier was saying you guys don't do it for land, but just in general, what would someone expect to have down for purchasing land?
I used to work for a mortgage broker where we did like land, and it's pretty high. I mean, it can be upwards towards like 50%, depending on, so I'm definitely not an expert in that any longer. Things could have changed a lot since then. But, if you're just buying raw land, they typically want, a higher down payment. I don't even know who does raw land anymore around here. As far as like lenders, I know there were some banks that were doing it. Maybe they've started again. I think tri-counties used to, and then I heard they weren't, but they may have started again. So
I wrote, because Central Credit Union does.
Yeah.
Yeah,
Okay.
Central Credit Union does.
Yeah, it can be kind of hard just because, and I think people are surprised by that. And then it makes sense if you're thinking from the bank's perspective. If you lost your job and you couldn't pay anymore, the easiest thing to let go is vacant land that no one lives on, right? Versus your house that you live in, right? Like you're gonna try to pay that. Versus land would be easier to walk away from. So they need a little bit more neck in the game.
Perfect.
Yeah. Okay, well, I guess we can wrap that up. Thank you everybody who's signed on here, and then also this is all recorded so people will catch this later too. So thank you for listening, and be sure to message us. Kim's information is here for lenders if you need to contact her for any lending stuff. And then if you would like to get a hold of us, I know that Evite had our email address in there to ask us any questions. And yes, you're very welcome. Yeah, and we'd be happy to help you guys. I know this can be a challenging market, so we're happy to help, and we've gotten plenty of buyers in and through escrow. So that's what we're here for. And
We'll see y'all later.
Yeah.
great. Have a good night.
Good night.
Bye. Thank you, Kim.